What I'll share in this video is a bit against the grain, so a lot might disagree with what I'm about to share, but I try not to make cliche copy-paste mindset wishy-washy videos that, you see them all over social media. This is a real observation from someone who does this for real. So to give you some context, a couple years back, I used to trade ICT or smart money concepts. And when you trade this way, you guys will know that when you trade this way, you're in that bubble, you start to get the sense that the markets can be solved. There's always a new concept to learn. You start thinking that the market is supposed to behave a certain way. You start thinking that the market follows certain rules. Or, you might be looking at the charts and see a lot of guys. Now, I used to be the same. You see a lot of the guys who will look at the S&P or the NASDAQ and they'll go, okay, the market needs to come back to rebalance now. There's all these imbalances down here. We're overextended now. It needs to come back, rebalance, fill these gaps. Or it needs to take these lows before continuing higher. And at that point, you start really imposing your own will on the market, trying to bend it to justify as to why it should do something. And what follows from that, and I say this from personal experience, is that you start to become very rigid in your individual approach to the market. For example, you start to form sort of maybe a checklist strategy or a checklist entry approach that somewhat removes all thinking from your trading approach. And all you have to do is just check, click the button when all your rules are ticked off, or when all your conditions are met, you tick the button, you click the button, buy, sell, whatever. And in doing this, and this applies not just to ICT traders, but a lot of new traders fall into the same trap. In doing this, you lose something that every successful trader needs to succeed long term, and that is adaptability. And there's a quote that's often wrongly attributed to Charles Darwin, but it goes, "It's not the strongest of the species that survives, nor the most intelligent, but the one that's most adaptable to change." And that applies 100% to traders as well. So the mindset shift that I'm referring to in this video is accepting these three things. And that's number one, a lot of intraday market movement is chaos and it is random. Okay, the market, short term, does a lot of random things. And if you're a day trader, you're going to be subject to that. Number two, the market is often irrational and will do the unexpected. The market doesn't have to come back and rebalance lows, sweep highs. It doesn't have to do any of that. The market will often do something totally irrational and overextend. And number three, you cannot expect to show up to the charts every single day and do the exact same thing you did yesterday, day in and day out. If you take this sort of rules-based, really rigid approach to the market's going to end up chewing your ass up and then wearing you like an ass hat. So what is the practical application and how do you apply being less rigid? It's good to say it. How do you do it? Well, I'm not going to tell you what to do, obviously. Everyone's approach to the markets is different. Well, let me tell you my approach. So number one, the first most important distinction is that my strategy is not a checklist strategy. Rather, it's a framework. Okay, it's not a strict set of rules. So I have certain areas in price that I look at every day. I can kind of predetermine these the day before. Certain areas I look at. But then I also have levels that develop as the day progresses, as the market unfolds. As price reactions, I have different levels that form and unfold as we go. And these are volume levels. And rather than having a set of rules I follow as to when I should enter or exit, I view price through this framework and then within that make discretionary decisions based on what's happening in the market. And then it leads on further to that. It's not even just about strategy, even when it comes to position sizing. I don't have a strict position size. Some trades I know when to take my foot off the gas and only enter with 1 to 2 contracts. And then sometimes I know when to lay down 5, 6 contracts, pyramid into a position and end up with quite a few contracts in one move. At the same time, I never have a strict risk to reward ratio. Some trades are actually negative risk to reward, and a lot of people on Twitter or YouTube or people in the comments hate on that. They say, "Oh, that's a negative risk to reward." It doesn't matter. Okay. Sometimes it's a really tight risk to reward. Sometimes I get 1 to 1, 1 to 2, 1 to 7 on a good day. But sometimes it's negative. It all depends on the opportunity presented on the day. Because I get this question a lot. People always ask, what's your position size? How much text is your stop loss? All this stuff. And I always say, there's no rigid approach to this. Every single day, the market is presenting different opportunities, different conditions. You have to adapt to the market, to the product you're trading even. So the point is, you have to build your strategy, your individual approach to the market, no matter what, style you trade in, to where it's less a strict set of rules and more a guiding framework, a lens for you to view the market through, that then you can then make discretionary decisions within and act based on what's happening in the market at that time. If I think back to when I traded ICT, there were a lot of days where it was like, oh, today is a low probability day. Today's a no trade day. Be careful, it's low probability today. And that was just the biggest bullshit ever, because there is opportunity every single day in the market. Any session, any time, any day. There's no low probability day. It's only low probability if you're not skilled enough to take advantage, or if you don't have a framework to take advantage of the opportunities on said day. So I have a framework within my trading framework, I have a framework for ranging days, trending days, news days. I trade FOMC and I trade CPI. I'm not ashamed to say that. I have approaches to taking trades during these news events, and I'll trade low volatility days, low volatility sessions, and vice versa. Okay, there's no day where I think, okay, there's no opportunity today, or, it's a low probability today. That just doesn't exist. And within these frameworks, I make those discretionary decisions and hopefully profit at the end of the day. Because ultimately, we can't control whether a trade is a win or a loss. The market's going to do whatever the market wants to do. Okay, we cannot impose our will on the market. And that's why a strict and rigid approach will not work in something that's as fluid and chaotic as the markets. So in my mind, I view it this way. At the end of the day, the only thing we can control is how we manage and react to losses. So all I'm focused on every single day is, if I lose, how am I handling those losses and how big can that loss get? So, for example, on my personal account, it means I can lose no more than $3,000 a day before I lock it up and move on to the next day. Okay, that hasn't happened in a long time. That's a max loss limit for me in a single day, okay? But I know that coming into a trading session, that's the only strict thing I impose on myself, okay? I'm here to make money, take advantage of whatever approach presents itself today in the market. My only strict rule is don't lose $3,000. But the rest is loose. Within my trading framework, it's loose. Okay, so that's the takeaway I wanted to put into this video, is to be more loose. You need to be more loose, man. And at least that's what works for me. Changing that mindset from thinking the market can be solved and that a strict, rigid, repeatable approach that you can just come in and mindlessly execute every day will work long term, because the reality is it won't. The most adaptable trader with the best risk management will win long term. Easily going to beat you out long term. So become that person or die.